Good morning, everyone. Thursday, January 10th. This is Anne Marie. Quick Apple update. It's very unusual for me to do two back-to-back Apple videos for the general public, but here it is because of this 520 break that I mentioned yesterday. 520 or 530, that's what we're looking at. It failed 520 on the close. Guess what? 520 is an important level. Guess what charts do when they fail or breach important levels? Yeah, that's right. They come back and retest the level. That's what we're doing pre-market this morning. We've popped up into the 521-ish area. That actually coincides with the 61.8 retracement on the nose of the prior day's trading high-low. All right, we have a custom fib that just pops that up for us. It's told us that that is a 61.8. That means we should roll. Here's the trade, folks. If we can't hold this 520, we are going to have more downside momentum. Now, the broad market is up just a bit, so there's no trading drift that's helping Apple along that way. So it may sit and meander, but between now and say 10:15, we're going to establish a line, a set of lines in the sand about holding this level. I did say shorting action under 520. Here's the thing I want you to think about, and this is the reason I'm doing the follow-up. If I say short, we've got shorting action under 520, here's what I'm actually saying. All the signals point to a breakdown of the 520 level. 520 is an important level. Important levels get retested. If this thing gets retested and holds, it is not a valid breakdown space. So where is it that I'm actually taking the trade if I'm looking at a swing perspective? If I'm looking at a day trading perspective, I take the trade immediately because I know the breakdown event is going to suck me into the next area of support. Okay? That's a done. I mean, that's a done deal right there. I'm talking about from a swing perspective, those of you that have triggers set up that go, okay, you know, I'm supposed to do this at the loss of. Listen, I would love for this to be a game that you don't have to think through. Seriously, I do. I do a face plant in my bed every night because of how much thinking is involved in this particular game. But when this comes into a level, do not blindly, okay, I'm going short. Now, most of the time, that's not going to be a bad thing. But if it pops and tests the resistance levels, you're going to run into trouble and you're going to have to take some heat. Notice this, right? We're looking at December. If we do the exact same thing that I did with the SPY video, I'm going to get us a box. Right? Where is our box? Come along now. Let's make that the bottom of the box right there. If this is the bottom of the box, sorry, watching me do this, I would say that's probably the top of the box. Bottom of the box a little messy. Let's just use the candlestick closes or opens to help us with that. We're going to have a 50% line that's going to be watched. Notice, just like I said, that 50% level is usually a decision zone. That looks like about halfway. Hence my reason for saying 530. A number of reasons, of course, but that's exactly what that 50% level looks like, and decisions get made there quite a bit. So watch that for the pull up into the region. If we look at the 3/4 quadrant, we're going to see 520.34, which is right where this fib is, wrapping up and pulling us into place. We are coming into that region right now. Listen, wait for the retest of the breakdown if you're looking for a swing. If you're not looking for a swing and you're looking for the day trade, you need to look at the tight time frames right here because it's in another decision space. But we can clearly see Bollinger Band breakdown. If we take a look at the hourly chart, we're going to see the Bollinger Band expansion away from this squeeze action. Well, that's too tight. but we could see a little bit right here. Right? Actually, this Bollinger Band has slope now. All right, but the 4-hour chart showed this expanding for us, and now we see the breakdown. The Bollinger already has trend. We've been sitting underneath our daily moving average, underneath the VWAP since the beginning of January. And so we continue to pop ourselves out of good, solid, positive trading space. Okay, that's it. Good luck. Things look negative, decidedly. And if we fail the pop here, it's going to open up another short.